and welcome to the bottom line. In today's video, I'm going to analyze the Indian map navigation company, which is broadly, if we see, it's a tough competitor to Google Maps, and it's native to India, built in India, and it is listed on the stock exchange a couple of years ago and is looking extremely good from a fundamental standpoint. So again, just as per the drill of every video, I'll reveal the name of the stock at the end of the video. The reason for that, I've stated before, that I want my analysis to be correct irrespective of which stock, so there should be no bias. So I'm going to take the same steps, the same understanding of the company, and then come up with some conclusive statements at the end of it. So in today's key pointers, company business, 90-second rule, I should be able to explain business of any company or understand it within 90 seconds of what they do. Understanding financials with simplicity, the current price versus earnings and where the stock is. This is in line with the explanation that I did in a previous video about dissolution, resonance, and resolution, and where the stock stage is as of now, and where the interests are developing. And finally, some conclusive statements. So, from the business standpoint, it is an Indian market leader in maps, data products, platform, and IoT devices in tracking geolocations. This company mostly provides its services and its products to automotive industry, broadly a little bit in government and corporate sectors. Maps provide 40% of the revenue, and platforms are close to 60% of the revenue. And they, in their list of clientele, they have some very good top Indian companies that they are supplying to. Uh, as one of the aspects, even phone pay, which uses your geolocation, it uses the service of this company, right? So, and they also have a 19% stake in this company. So if we try and understand, the most important for me whenever I start with any company, I look at the debt, because that is a scary aspect for me, at a personal level, and even as a analysis of any company, I look at debt. So if we look at the debt and compare it with the peers, this is since it is dealing with maps, it is obviously a IT services company, right? So if you see, debt to equity is quite low in comparison to all its peers, and that puts a lot of confidence in my understanding about the debt to equity. So it's 0.02, is it's very negligible. So the company is running on full equity capital from the promoters and a little bit of public. So that is a good sign to start. If we look at the annual profit and loss, just look at the OPMs, which matter a lot. So out of every 100 rupees of revenue they are making, they are able to keep 46 rupees with themselves, which is a fantastic operating margin. And after putting out all the other expenses of depreciation and tax, they're making significant profits, significant growth in APS. And this is a relatively newly listed company. That's what makes it more attractive. Originally, the company was started in 1994, but they've worked on it with time. And now, since the internet era has come up significantly, the company is now doing better than they were doing in the first 15, 20 years of their business. If we look at the debt and cash check, debt, as I said, is zero, but there is some lease liabilities. But if you see, the lease liabilities are around 12 crores. But if you look at the cash equivalents, are about close to 99 crores, which is about 7 to 8 times of their lease liabilities they are holding in cash. So that's where generally I think of defaults. What are the chances of default? So the chances of default are very minimal unless the situation changes next year. That's a different matter of fact. But broadly, if we see 7 times of the lease liabilities, that puts the company in a very good shape. Free cash flows, which, if I have to very quickly tell you what free cash flows is the money received from sales minus the money spent on buying fixed assets. It could be land, machinery, offices, computers, anything, and a net of investments, investments done or investments sold, right? So all of that put together forms the free cash flow. So if you look at it, 24 minus the free cash flows, is 79.57. So all of these are giving me a positive free cash flow number, which is very important that, from the deduction of operating minus the investing activities, they have been able to put aside some capital every single year consistently. That matters a lot in the long term. When this capital builds up, they're able to do something bigger from the same capital. Stock price divergence, which is one of the most important aspects, is if we look at the point where the price is and where the earnings are, and I'm expecting these earnings to grow significantly from here, because I'm seeing tremendous potential in the way they are doing business. Again, this is bound to be affected by a large number of external factors, and you really cannot avoid that. There's no way that I can predict the earnings and they will turn out to be the same way. I will be watchful uh, about the future scope of the company, but the right now, the company's position and the stock price as compared to the earnings looks to be in a large amount of dissonance, right? That means there is a significant chance that the price will move towards the earnings, right? Or will follow the earnings as long as earnings keep on increasing, right? So every quarter, every 6 months, I generally go take a look at the earnings of the stock. How have they done? Have they added any new borrowings? All these checks continue to happen over the period of time, over the period of investment, right? So with that, uh, again, as conclusive statements, this is a maps company, also has an app on Google Play Store and Android as Maples. It has some very diverse and unique features as compared to Google Maps. It is still in progress, and that is what makes it so powerful. It is imperfect, and that is where the room to grow is. Imagine this app becoming a perfect app, and there and you are part of that growth, or I am part of the growth. That's where the growth stories are. That's where the wealth creation is. When you invest in imperfections, calculated imperfections, I would say, look at the financials, look at the debt, look at the free cash flows. They're doing fantastic. They're not spending anything that is outside of the business. They're not doing any acquisitions that are not aligned with the business ideas. So that puts a lot of confidence in my mind when I look at this company. So this company is CE Infosystems, also known as Map My India. The app is called as Maples. Feel free to try it out. This is not an endorsement, of course, but I have tried it. I found a few places where it is extremely unique. For example, I've seen one feature that I've personally used and felt is in Google Maps. When there is a flyover coming up and there is a road on the side of it, it generally is very difficult for you to figure out which road do I have to take. But in Map My India, what they've done is whenever you see a road which is now diverted into a flyover and a normal road, it actually gives you a visual on top of your map which says take the road that looks as a flyover, and it shows a clear arrow that clears any confusion. It's a subtle feature, but it's a very effective feature. So that's pretty much about C Infosystems. Take a look, see if you find this as an interesting company to track, to view, uh, you know, for any probable interest on your side. Um, this is it. Thank you so much for spending time on viewing this. I hope this adds a lot of value and gives you a different insight on the Indian Google Maps. Thank you so much, and I'll see you in the next one. Bye bye.